Hey guys, wanted to record this quick video to recap the action on today's session, January 15. So today was a very interesting day, and there were a lot of opportunities if you had the right amount of patience and the right level of discrepancy to apply to the market conditions. So let's start off with the bigger picture. So going back on the 15 minute chart for a second here and looking at the bigger time frame. Today the market's gap down. It goes to 2.5% at the open. And usually when you have a gap down of this significant size, there's usually about three possible scenarios. Number one, the market simply consolidates as it works off that oversold condition. Number two, the market continues to basically push down right from the morning gap. Or B, we get a quick V turn as buyers quickly step in. You might see a V type of turnaround. And what happened today, what unfolded was we had some tight consolidation for a good hour, 2 hours in the session, followed by a continuation in the direction of the gap down. And so this is what the ES looked like. We had that strong gap down, got to this area here where we're outside these Bollinger Bands, and we had to pull back and kind of work off this oversold condition by consolidating against some of these moving averages. So that's very common type of situation. And how I decided to play was a couple of ways. So first off, I was looking for early bird plays in the morning. XIV gave an early bird play right about, let's see, right here at 9:33. I took that long trade, got filled. It went 2R. I trailed for par and it got stopped out at par. So I got stopped out in this range here when it came back down. So as I was watching it, we saw this megaphone pattern appear, this broadening wedge pattern, which I like to watch for a lot. And what's important how you draw the megaphones is that you really want to be drawing not just the megaphone itself, but what is significant is the levels of support and resistance inside a megaphone. So for instance here, the megaphone, we draw the lower top and the higher top, and the lower low, the higher low and the lower low. That turns into our highs and lows, lows and lower lows. Right? So at this point, this is how we draw the support, or the levels of resistance and support. We'll take this line here. See, so this the body of the lower high, and that becomes our level of resistance. Here, the body of this becomes the support. All right. So what we're looking for is, so long as these errors are being honored, we want to be trading in that direction. So what we saw here was that the XIV, I was long, I got stopped out for par. It then broke through this lower line, right? So this shift here, this strong push to the downside, that is kind of a significant push, and it pushes to the downside through this level. Well, at this point the level is not created yet, but we get a good push to the downside until this lower low is created. That's when we can draw our line. So at this point we want to be seeing, now can the market now retrace, and was it going to break through this level of resistance? As we can see here, it does not break through that level of resistance, and in fact it's actually struggling just to keep above this line. And once it breaks above this line here, we want to be looking for potentially selling conditions. So flip that with the VIX now. So this is what I was looking for. So the XIV was not setting up properly, right? So we had some lower lows happening here, and so the XIV, I looked on the VIX, and I was looking for opportunities to go long. And so on the VIX, we talk about predictive price patterns, and here's a predictive price pattern. We had a nice descending wedge popping out of here, and this is actually, you can actually consider this a cup and handle pattern. And I actually got long on this breakout right here. So you draw our descending wedge. I got long on this break right here. Draw my risk to rewards, and that was a good trade, right? So there's the risk. I bought that breakout bar. I saw the volume was beginning to increase, and I bought that bar, and that worked out in this scenario. Now this was a long trade. I held it from 10:51 and got out. I want to pull back in here. 10:51, I think it was like past noon, yeah. 12:43, so that was a good close to 2 hour trade. And what I want to show in this lesson though is this here. So this here can can make a lot of traders nervous, right? And this is why we use trailing stops, and we use the trailing stops that we do, the methodology that we do, so that we get to stick and stay in trades and don't get scared out. So this is very, very productive. As I say, this is working off a condition of being overbought. So we have a sideways pattern here, a really deep consolidation, and the break of that happens right there on volume. So you can see here, we break above this pattern right there. In fact, we set up another early bird setup right there, which is an exceptional setup. I was already long, so I did not go long. So if you missed this setup here, that's fine, but this setup was gold. Now, the only caveat here is that a lot of people, myself included, I don't like to trade the noon hour, so I probably would not have taken that trade. Although this is a very, very compelling setup because we had a long condition of consolidation. So had I not been in that trade and I was watching, then this is certainly very, very agreeable. And I might want to make an exception to my rule book to take a setup like this because it was such a good setup. We had a very, very low risk. We would buy that scenario there, and then that's an early bird setup, and that went up quickly, 5R in our favor. We could have trailed for 4R. The question remains: could you have gotten filled on that? Because it looks like there's a bit of a gap there. If we're honest with ourselves, there was a bit of a gap, and you would have to move very, very fast to get filled on that one. But again, there's also ample opportunity here, as we see multiple levels of resistance getting taken out, and we have lots of opportunity here to get long. And so that's why it's important to look. This is a perfect kind of a cup and handle pattern here. We have increasing volume right there. So this is the kind of pattern that you definitely want to be looking at and checking out that price action. Now, I want to also just quickly highlight the larger time frame, the 15-minute chart, and this is what it looks like on the 15-minute, right? So we have some really obvious signs here that the bulls or the buyers were in control. We have buyers stepping in here, creating these long wicks and creating these hammers and consolidating against the major moving average. This is what I love to see in an opening range break play, right? So there's plenty of opportunity here to this is a traditional ascending flag, right? So this is definitely a bullish pattern. It did not go to distance, but you had plenty of opportunity here to get long and capture at least 2R on that trade. Okay, the rest of the afternoon was actually very tricky, and actually my preference is not to trade an afternoon like this because we're heading into a long weekend. So knowing that Monday most of the markets are going to be closed, in the afternoon it was quite choppy. And so if you weren't aware of that, then you could have easily been chopped up. Okay, so hope that helps. We'll talk to you guys next week.